Hey, welcome back, everybody, to another Market Conversations. I'm Jerry Hall. Really glad to have you folks tuning in tonight. Thanks for the folks that have jumped into the chat even prior to the show starting. Good to have you. We are broadcasting on Twitch, Facebook, Periscope, and of course, YouTube. So tonight, I had pre-planned a conversation with you folks about 401ks and really understanding the nitty gritty and kind of the ugly truth about who profits from them. But I was reaching out on Twitter to one of my little crypto heroes to see if I can get him on in the next couple of weeks. And he said tonight worked better for him than any other night. So I am absolutely pleased to be able to bring John E. Deaton, that's right, John E. Deaton, Esquire, attorney at law, onto the show. And I want to start the first part of the show off with a conversation that's near and dear to my heart, and that is this path that crypto has taken for my personal financial literacy. And I'm sure many of you, and I know the audience that tunes into my show, that's a key topic, understanding the world of finance around us so that we can better use that information as investors to produce better outcomes, not just in crypto, but in all areas of finance of our life. So let me, before I bring in my guest, let me say hello to who's chimed in. Joe Fernandez, great to see you here earlier. Scopsion, great to have you. Bill Gould, Brady, Pete Kelly, and the other 15 people that are tuned in, I can see on the counter that haven't introduced themselves yet. Let me bring in John E. Deaton. Hey, John, great to have you on the show tonight.
Hey, Jerry, thank you so much for having me. It's a privilege.
So, I gave you a little lead in. You kind of been one of my XRP heroes, fighting a fight that I only wish that I had the acronym to do. But before we dive into that thing, because it's a hot topic, I want to talk about your path for financial literacy, and I'm especially think the audience would enjoy the story you shared with me about how you're trying to educate your daughters because public schools aren't going to do it.
That's right. Absolutely. And good for you, because a lot of people today are not attacking this, in my opinion, one of the most important tools that we need to develop, and we need to develop at a young age, is financial literacy. So, for example, when my daughters, when they were in high school, I told them, I usually don't tell them what to do that much and what interest. I let them find their own interest. But I told them the one mandatory class that they had to take was personal finance. Not that the high school personal finance was going to give them, the wealth of knowledge, but the basics, because it's amazing to me the fact that it's not mandatory. It's amazing to me that even educated people who are very bright shy away from it. People are intimidated about money and about finance, and they get overwhelmed by it and they defer too much. To give you an example, I think everyone should learn how to do their personal taxes. That doesn't mean you do it every year, right? You have an accountant, but you need to learn, because the accountant that you have is going to have hundreds, if not thousands, of clients. You're going to worry more about your money and your future than any stranger that you hire. And so knowledge is power. And so, yes, when my daughters, I said, listen, you need to take this class. You need to start educating yourself and learning, because, it's going to affect every day of your life. And understanding, interest and what credit card debt can do to your future, for example. Understanding just basic financial principles. So it's a topic I'm glad to hear, because not a lot of people are attacking it. So hats off to you, Jerry, for trying to attack this very important issue.
Well, I'll tell you, I don't know if it's an attack. I'll tell you, it was a realization. So to give you some idea, I'm 54. My graduating year of high school was 1984. And I so distinctly remember the only piece of curriculum through my elementary school, junior high school, and high school that had anything to do with even personal finance was in a home ec class I took because I had a crush on Julie Sullivan, and I knew she was taking that class, and it was an elective, and I took it, this home ec class. And in home ec, there was like a week where part of our class was we were learning how to balance a checkbook. And the test was we were given X amount of debits and credits and had to actually enter it into this little, ledger for the checkbook. And we turned it in, and that was our project for that thing. That was the extent. Now, I go on to college. My initial major was medicine. And so obviously business administration and things and economics and those type of things are not part of that major. But there are stuff in general ed. Guess what? Nothing in general ed gave me any financial tools. So I, go off on my life. I become an adult, and all I'd learned is make money, spend money. And through the 80s, you know how that was. It was like, let's get everybody to consume, which means learn about taking out loans, learn about debt, right? Yeah. So go make as much as you can, spend as much as you can. And here, Jerry, because you don't know much about finance, Wall Street's got you covered with these 401k plans.
Right.
We've got your retirement covered. That was the extent of what I learned. And, fast forward to 50 and I want to retire, and I'm looking at things and I'm going, wait a second. I'm nowhere near prepared. I find crypto, I go, maybe this is my opportunity. I get some skin in the game. I start researching XRP and what it does and who it interacts with, which leads me to understanding currencies, right? I start learning about global currencies and how are they exchanged and the value propositions and, how that market works, which leads me to bonds, which leads me to, brushing up on stocks and understanding commodities and these things. And I'm thinking to myself, I knew nothing prior to 50 years old about how the world really works as it pertains to money. And I was just like, wow. And it was crypto that opened the door for me to learn. And it's been through the communities and things like YouTube and others that have given me piece by piece by piece to the point where I kind of have an idea now. I'm no expert by any stretch of the imagination, but I got an idea how the world works. And I'll tell you, the more I learn, the better investor I become. So there's a positive feedback loop, because the better investor I am, the bigger my portfolio is. It's very incentive based, right?
Absolutely. Absolutely. And the story that you just told, Jerry, you graduated in 84, I graduated in 85. So,
okay.
All right. I'm 53. We know when you talk about the 80s, I think it was called the decade of decadence or something like that. But the story that you just described, being, hitting 50 years old, realizing, retirement starts entering that brain, right? And then realizing that you haven't really learned what you should as far as money, as far as finance. The story you just told is basically 80% of the world, you know what I mean? And if you think about some of the statistics that we're learning, that COVID pandemic has shown, 70% of the people in the United States don't have more than $500 saved up. When you ask people that have 6 months of savings in order to pay their day-to-day bills, you're talking about 15%, right? Only 15% of the population has 6 months of bills that they could pay if they get hurt or they have some kind of disability issue or a pandemic or whatnot. So, and I agree with you. Crypto, to me, what attracted me the most is, I grew up very poor. So
yeah, me too.
Money's been an issue for me. When you hear your mom cry at night, because her kids went to bed hungry. And I don't want to imply that happened every night, but it happened, at times. It's a different type of cry, right? It's not a normal one. It burns in your mind, in your memory. And so having experienced that, money has always been an issue for me. I went in the Marine Corps and I was in debt. And even though it was an issue for me, meaning I wanted to learn, right? Because I wanted to learn, what does that guy or that gal know that I don't know? One of the issues I have today is this, is there seems to be this division about everything, right? The rich, the haves and the have-nots. There's class warfare. There's tribalism everywhere. And I remember I didn't hate the guy that had money or the rich guy. I wanted to know what he knew that I didn't know, for me. And like, what can I learn from that person? And so I think crypto, though, is a chance for the have-nots, if we can get them educated, to start getting a piece. And even things, and it may sound corny, I don't know, but to me, maybe I'm naive and I'm too idealistic, but I think crypto is a chance to bridge some of that divide between the haves and the have-nots. And in my experience with people that are in this crypto community, as I was telling you off camera, is regular people that just want to build a little bit of equity, a little bit of wealth, if they can, provide for their family, enjoy life, and are decent, good human beings. But we've got to get those people the tools. That's the key. You got to have the tools. The basic concept, for example, of you have to spend less than you make, right? Just that one basic element is missing in so many people. They're not taught that. And then you introduce them to a credit card, and all of a sudden they have the ability to spend more than they make. And then all of a sudden they find themselves in serious debt. And so, so I agree with you. I think crypto is an opportunity to, introduce finance to the Gen Z and the millennials and even our generation, right?
Yeah,
that are hitting that retirement zone. Because we no one wants to work till they're 80, right?
Well, what's interesting, John? So this, I don't want to be too long-winded about it. So in 2010, I'm looking for a way to set up, because I know when I get Social Security, that's not going to be enough to live in Northern California. I just know that. I lived in, just north of San Francisco in the wine country, and there's no way I could support a lifestyle on Social Security. So what I'm going to need, I need to supplement it. What is it going to take me to produce $50,000 a year safely, right? Well, you talk to my guy at Schwab. Okay, $1 million in bonds, 10-year bonds with a rollover program. You just every 10 years roll into new 10-year bonds, right? That would produce $50,000 a year. Well, let's fast forward to 2019. To get that same $50,000 a year income, you need $2 million in bonds. And then something happened. COVID.
Yeah.
Do you know what it would take now to produce a $50,000 a year safe income from bonds?
I do not off the top of my head.
$10 million.
Wow. That's shocking.
And I would not consider $50,000 a year an extravagant lifestyle. So what the point of that is what I'm realizing through my, study and exposure to this crypto space is that the adage that you and I grew up with, that our parents lived by and their parents lived by, that is no longer okay or good enough to work hard and make more than you spend. That is no longer a winning proposition. And the reason being is because you can't increase your earnings 24% every year just to keep up with the rate of monetary expansion, which is debasing and devaluing your currency around you. cost doing one thing, sending the price of the assets that you want, i.e. homes, retirement incomes, all are in hyperinflation mode. So the only recourse for anybody who does not want to be on the road to serfdom is to invest in assets that are going to exceed that cost of capital, right? And there are very few bonds. Debt market doesn't produce that anymore. So some equities do, and some cryptos will.
Right.
And thank goodness for them, because gold won't.
No.
Commodities won't. And so, you know, we're at a great time, right? Where guys like you and I can get into our hoodies or pajamas, get on a YouTube channel and just talk, because when you and I were young making financial decisions, we didn't have these kinds of sources of information ready available to us. There was no internet when you and I were graduating high school.
Yeah, you know, you bring up two great points. One is the latter point, which is, you know, I said earlier, and you know that knowledge is everything.
Yeah.
And there isn't a reason to not educate yourself now with the internet and with information at our fingertips. Even if it's intimidating people to learn these things, they have the ability to do it. But, you know, you mentioned hyperinflation. I keep seeing these stories. Oh, we're going to be able to hold down hyperinflation. And do you think hyperinflation is here? Because I'll tell you something. I guess it depends on your definition of hyper, but a dozen of eggs a year ago in the area that I live was like $2.79. Okay. It's $4 now.
Mm-hmm.
Now, I think a 70% increase in 12 months on something like eggs, bread, milk, butter.
Staples. These are everyday. None of these are extravagant things.
They're not. And what does that do to the poor, especially? You know what I mean? Or the working class. Let's just not even go in the poor, the working class. I mean, if you double the cost of everyday items that you consume, yet your pay, what, you get 2% raise maybe if you're lucky nowadays. So exactly what you said, the days of being able to work hard, put away money, collect some interest on the money that you put away, they're gone. And the only opportunities that I see it are, as you said, whether you get some high growth equities or whether you get into crypto and you get a yield from your crypto holdings and things of that nature. So it's almost as though crypto to me is becoming a necessary avenue that people need to take. You know what I mean? Not, you know, we may have got into it sort of haphazardly or by accident, or, you know, however you fell into it. I just remember hearing about Bitcoin, and so I read the white paper, and then, you know, went down that rabbit hole, and then got interested because I started thinking about, wow, you know, the banks, I don't have a big high opinion of them like many people, and thought, wow, if you can cut them out and you can actually, as long as you have a smartphone, you can participate, almost like a true capitalist type of society, right? Yeah. A person that's making a straw hat in Nigeria can, like, you know, as long as they got a smartphone and they can create a little website and they can accept crypto, all of a sudden they're participating. And so that's what interested me. But now what other options are there? You know, you're probably more into the topic than I am. You know, to be honest with you, you probably know more about the bonds and all that than I do. But because I would have never guessed it, I would have said maybe double, but you're talking 10 times, right? When you were younger, $1 million got you that $50,000, you know, passive income, and now it takes 10 million. That's just, if that doesn't wake people up, I don't know what deal. That's just shocking.
Well, you know, so they can being the financial news media and monetary policy makers in Washington can say that they're just not seeing the inflation that the economy needs. Well, the truth of it is that you're right. The cost of living on Netflix isn't going up that much. It isn't. Domino's Pizza isn't raising their prices very much.
Right.
That's true. However, when you want to, like, we all aspire for more, whether it be, status in our community or a balance in our financial statement, we all strive. I mean, that's why we get up in the morning and go do something. It's to be better. It doesn't always have a dollar value associated to it, but the point is we all get up in the morning and go do something. In hopes that tomorrow will be better, that what we're learning today will produce better outcomes tomorrow. And this whole game, right? This whole game of finance has been rigged forever. And that's not even a bad thing. It's just the truth. The wealthy have had tools. The wealthy have known that you don't get involved in what they call depreciating assets. You seek out appreciating assets, and you don't sell them. You let everybody else deal with buying new cars every 3 years. You lease them through your family trust company.
Right.
You never sell your property. You take loans against it as it appreciates. Why? Because if you sell assets, you got to pay taxes. But if you take loans against your assets and the assets continue to appreciate, at some point, you may never have to ever pay anything back if your assets continue to appreciate. And the idea of you never spend principal. Can you imagine living in a world, John, where you never had to spend your principal to live your life? Where you just lived off of the yield and that your capital created for you?
Well, I haven't experienced it yet.
But exactly, and neither have I, never in my 54 years of life. But the point is, I'm learning that the secret is just that. Absolutely. If you can live off of your yield and less than your yield accrues, then you'll continue to compound into the principal, and the principal will get bigger and bigger and bigger and bigger.
Absolutely.
So that whole age-old adage, the one you and I were raised on, right? Live within your means. Live within your means get assets that don't depreciate, right?
Yeah.
And have them produce yield and live off the yield. Don't touch the principal. Let the principal continue to appreciate and compound. Now, if everybody can just get that, it doesn't matter if it's Tesla stock or XRP or Orange Futures. It doesn't matter what the asset is. If it's appreciating, you can get yield off of it, live within the yield, and let the principal continue to appreciate and add a little bit to it so it compounds even larger. Then we will all prosper. And at the end of the day, I think you will agree with this. I believe at the core of much of the strife in the world is income inequality. People don't know how to get ahead, even though they intuitively know they're losing ground. And that creates frustration and turmoil.
It does. It causes social unrest. It is a underpinning of our society, because from the time that you and I graduated high school and today, that wealth gap just keeps getting bigger and wider and wider and wider each year. And at some point, it's going to cause some kind of problem for our country if we don't get it under control. You just can't. And I agree with everything you're saying. I just had the conversation with my daughter. She's gonna be a senior in college, and she's thinking about, as she graduates, making about buying a home, and her friends are talking about like these nice apartment places, and I'm talking to her and I'm like, what's wrong with getting a duplex, and living, and collecting rent, and maybe the rent you collect, you can break even, or you pay very little bit, and then live like that for 3 or 4 years and then see how it goes. But the problem is a lot of people, of course, want it right now, right? And they want the flashy car. And it's the one thing also about our I was telling this to my younger sister when a guy drove up and he had like an $85,000 BMW. And I could tell that he was kind of like a poser, if you know what I'm talking about.
Yeah, I know exactly what you're saying.
And I said to her, she's like, "Oh my God, Dad, not Dad, my sister, brother John, he's a baller. He's a baller." And I said, let's wait and see how much he puts in gas. It just so happened he put like $2 in gas. I said, because he's paying everything for that car. He's living for that car by the time he pays the car payment, the car insurance, and he's digging himself in a hole. And so back then I'm trying to teach my younger sister, I'm 12 years older than her, not to fall for that temptation of having it right now, because you and I know more than people younger than us that age 50 comes fast. You know what I mean? I don't know what happened between 30 and 50. It's like I blinked and I'm 50 years old. You know what I mean?
Right. No, I hear you. It's so I've done a lot of comparison stuff, right? Because I'm really intellectually curious. So I measure everything I could find. Commodities. Okay, there's nothing in commodities that's a viable asset, because why? When the value of a commodity goes up, the incentive to produce more of that commodity is in the marketplace, like gold. Absolutely. Gold, I was always told gold, you get gold. It's this thing, it retains your value. Well, check this out. They produce 2% more gold every single year. And the minute gold gets up to all-time highs, the miners are incentivized to mine more gold, which is the enemy of every single person that owns gold, who wants the value to continue to go up. Supply and demand, right? Dilution of the asset. So that's every single commodity. Scratch them off the board. They're not a viable long-term investment. Okay, great. Let's talk about real estate. Real estate. Love real estate. They're not going to make any more real estate. But guess what? They will develop undeveloped real estate. So there's that element.
Sure.
Then there's the element of, guess what? Whatever jurisdiction you're in controls your tax. And when they have a hard time creating tax receipts, guess what they do? They raise taxes.
They raise it on the people they can collect from.
The people who can't go anywhere, the people who own the land.
Right.
Exactly. The real estate. So real estate as an investment, not a good idea. Real estate as a home, wonderful idea, but not a great investment if you really look at it. So we've got that. Then you got, well, what about all those people that do own apartment buildings and commercial buildings and things of that nature? How do you raise the rent on your tenants to meet the cost of expansion of monetary supply, right?
Yeah, that's a good point.
You can't.
Right.
So who ends up taking it in the shorts?
Yeah.
It's not really taking it in the shorts. You're just not getting ahead. All right, well, let's go to the good old bond market. There is no yield in bonds anymore. The highest yielding bonds are in the junk market of companies that are damn near insolvent at 4%. Right. Okay, so bonds are no longer an issue, right? They're not an investment to get anything from, really. Well, that leaves the stock market. Well, even the S&P at 12% a year doesn't beat 24% monetary expansion. NASDAQ at 17 comes kind of close, but does it really?
Right.
You know what I mean? So this crypto world with fixed supply assets, Bitcoin has shown us the way. Bitcoin has said a fixed supply monetary network has value.
Absolutely.
Great. And we have others like, I love XRP. I've got a bunch of layer one stuff, like Ethereum and DOT and Algo and Atom and stuff like that, because I don't know who's going to build the next app that 1 billion people will use, but it'll be built on a layer one smart contract platform. I don't know which one,
right?
But somebody will. So I got a little exposure in those.
Yep. So do I.
There you go. And then we get to our beloved, what's made you famous is payments tokens, right? The ability to cut out the middlemen. So if we're looking at this rationally and it's not a hypey thing, but rationally and go, okay, the future is dismediation, right? We're going to take out middlemen. We're going to reduce the cost between a seller and a buyer, or a user and a provider.
Correct.
We take that middle cost out. Everybody benefits. Well, that's what these blockchain technologies do on a global basis. So why wouldn't we be in that? You've got fixed supply. Nobody can come in and through policy or desire or whatever policy change that. So as each new dollar comes into each new network, it makes every other part of the network more valuable, right? So if you've got a Bitcoin and somebody comes and buys some Bitcoin, your Bitcoin just got more valuable.
Absolutely.
And it's on and on and on with every one of these fixed supply assets. So that's the game, right?
Yeah,
that's the game.
I'm with you. In fact, I think the question's no longer, I'd like to hear what your take is on this, Jerry. The question isn't whether we should be in crypto. The question is how much of my liquid assets do I put in it? You know, do I go 50? Do I go 70? Do I go 100? You know what I mean?
This is what I would do. Don't you think this is the most rational answer to that? Only put the cash into crypto that you want to keep. All the other cash that you want to be devalued and taxed away, go ahead and leave wherever you want. If you want to keep the cash, get it into a monetary network that can't be manipulated by policy or taxation.
No, that's a great way to look at it, because
it's rational. It's just kind of a rational. I'm no genius.
Well, no, but like you said, if you have $10,000 sitting in the bank in a savings account or a checking account, why? I mean, you know, if we're looking at its debasement somewhere at the low end of 15%, somewhere
low end 15,
somewhere between 15 and 25%. Would you agree?
Yes.
All right. So that 10 grand is worth 8,500 12 months later. I mean, just start looking, you know, I always use the numbers tens because it's easy for me to do the math, right?
Sure.
But all right, now it's 100,000. Okay. So are you willing to lose 15 to 25,000 if you have 100,000, you know, on a yearly basis? And so I take your answer and then I just start plopping in those values and thinking, wow, you know, and if you're fortunate enough to have $1 million, are you prepared to lose, you know, let's split the middle and say 20%. Are you prepared?
Really to lose 200 grand?
Right. Are you prepared to lose 200 grand on a yearly basis? You know,
no fault of your own.
And no fault of your own. And then what's that give you? That gives you 5 years and your $1 million.
Well, actually, it's a lot longer than 5 years because 20% of 80% is not
10 years.
You understand? Yeah, it would not take very long for that to be nothing. Right. You know what I wanted to bring up, and I think this is one of those kind of paradoxes that kind of just rattles my brain. So here you are, when you're younger than I am, you went to and got a bachelor's degree, right? You got your 4-year university out of your way. You go to additional years of school to get your attorney's license in the state that you're operating in. This is a minimum 6 years plus some sort of internship somewhere.
Correct.
Call it 7 years.
Right.
7 years of education before you're putting a plaque on the wall if you choose to, you know, a plaque on the door or something. Right. That's 7 years. You weren't wealthy. I wasn't wealthy.
No.
I'm you had to take some, what did you have to do? You had to play the debt game.
I did. When I graduated law school, I had 75,000 student loans. You want to know something scary? I hired an attorney that worked for me. She graduated 2 years ago with her undergrad and law school, and she didn't go to Harvard. She just went to a regular, you know, law school. $200,000 in debt. $200,000 in debt.
That is inflation.
You know,
that's inflation.
There you go. Right.
Who says we don't have inflation? Look at the cost of education.
It's
Look
crazy.
at the cost of buying a house.
The daughter I was telling you about goes to, she was fortunate enough. She got into USC. She got denied out of high school, and then she went to Cal State in Long Beach, and then she transferred at USC. 62 grand a year without room and board, dude. Yeah. You know what I mean? So that's out of my net, right? So you have to have a plan, and you have to, and she's in a fortunate position that I'm not. She's going to start life not being in debt. I started, my adulthood in debt, so that's my gift to my children. But that doesn't mean that they're going to have they need to start planning. That's why we're having these conversations. When they were in high school,
I love it. Good. I wanted you to tell this story.
Yeah, when they were in high school, so this would be 5 years ago. I got interested in Bitcoin, and so I assigned them. One was a junior in high school, one was a freshman in high school. I said, okay, Olivia, you're going to take pro Bitcoin. I want you to research this Bitcoin, and I want you to give me a presentation on why I should invest in it. And Jordan, I want you to take the opposite. And so, I made them look into it, and I made them give me a little presentation at home and whatnot. And so, and the good thing for them is, even with their little bit of savings, my daughter Jordan, who is one of the XRP people that are on the suit, she bought a Bitcoin when it was under 10,000. You know what I mean? Because she had 15 grand that she had saved up until basically being 17 years old, and so she bought a Bitcoin and she bought XRP and some Ethereum, and so it did him well.
She's done pretty good if she has not sold them. And let me ask you this, and this will tie into a question that we got from the audience about yield. Is she using any third-party platform to earn more Bitcoin, XRP, and Ethereum while she allows it to marinate and the forces of capital appreciation to occur?
She hasn't yet. We've been talking about it. My girlfriend has BlockFi.
Okay.
And she has some Bitcoin, and she has it on BlockFi. And I've just started talking to them about that. What program that we should go into. Now, to be honest with you, I haven't fully researched, which institution that I should put my money in to produce that yield. You know what I mean? I have Algo, and others where you get you get sort of dividends, if you want to call them that.
Like you have your algo sitting on Coinbase, and if you have a Bitrue account, you can earn some interest on your XRP or half a dozen other assets that they got there. I'll tell you.
I'd be interested to hear what you think about it.
Well, I'll tell you, I own, John, and this isn't bragging. This is just a result of the learning process. So I brought my little $50,000 of capital into the market January 2018. We all know what 18 and 19 were like. Yeah, it was tough. Anyway, make a long story short, made a couple of moves within that. And as my portfolio grew, I put all my assets on Nexo and started a process of borrowing, collateralizing loans against my crypto. Smart. So that through a process of one that carefully created, I keep my debt to equity ratio 20%, so I'm not that in danger of getting liquidated.
Right.
And as my portfolio grew and I got chunks of what I would call capital to borrow, I would borrow it and buy crypto, put it back on the exchange. Right? Buy XRP, earn interest on it.
Right.
Borrow against Bitcoin, buy more Bitcoin, earn interest on it. Dun, 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 dun. And it's been a pretty good thing. I've got 20 assets in my portfolio, and only one of them does not produce yield for me.
That's great.
Through either a Nexo, I have Nexo, Celcius, BlockFi, Bitrue. Almost all of my proof of stake protocols have their own wallets that are generating staking rewards, which is a yield.
Right.
And so out of 20 assets, only Casino Coin does not pay me a yield because I have not found a place that will pay me yield on it yet. And if I did, I would.
Right.
And you do this, and over a period of time, you go like, and again, this isn't bragging. It's a process of the results. 50 grand is turned into 600,000.
Fantastic.
And that's through compounding interest. Compounding interest, taking a limited amount of risk from collateralization of loans to buy more assets, not buy new shoes, not buy fancy dinners or vacations, buy more assets.
Right.
And then earn yield on all those assets that compound into themselves.
Absolutely. And it's good of you to share that, because what you just demonstrated, it's not bragging, right? But you just demonstrated. Where else can you do what you just accomplished? You said 2018, so 3 years. In 3 years.
Well, in 3 years, I don't know. Well, you could do it. If you had a lot of money, let's say you were wealthy, because all I'm doing, John, is what the wealthy already do. So where else could you go to do it? You have to have a lot of money, and you have to have an account with like a Fidelity or a BlackRock or a State Street.
Right.
And you will take your 5 buildings that you own in Manhattan, and you will never sell them, but you will collateralize a loan against them.
Right.
And as they continue, their value continues to go up in this hyperinflative asset market, the ability for you to borrow is going up, because if your base loan was here and the appreciation rate of your assets are going like this, you've got a lot of room to borrow.
Yeah.
So you just borrow. But what you do is you borrow and buy more asset. Not take a vacation and not buy a new car. Don't put it in a depreciating asset. You buy an asset that's going to appreciate.
I don't know what you think of them, Jerry, but it sounds like you're basically doing similar to what Michael Saylor's doing with MicroStrategies, where he even took out,
a 0% loan, $1 million, 0%.
0%, and bought Bitcoin. You know what I mean?
$1 million worth that turned into $2 million.
Right. And then
$1 billion.
Right. And then the convertible bond. So no, you're just you're doing the same thing basically. And if you can produce that yield, when you say these things out loud, I'm sitting here saying, okay, why am I not doing that? To be honest with you.
There's a lot of reasons. Fear, let's be real. Anytime, and this is the truth, anytime in cryptocurrency, you're not holding the keys to your asset, there is a counterparty risk somewhere.
Correct.
We have to acknowledge that. I acknowledge that, and I understand every single platform that I'm getting yield from, there's a counterparty risk. And I have the amount of assets which with each one of the platforms up to the tolerance of my risk with them.
Right.
So number one, I don't have all my assets on one thing.
Right.
So the chance of catastrophic collapse of all of them happening at the same time is much lower than a point of failure in one part of the chain.
Right.
Okay, that's one thing. The other thing is that, again, a lot of these things, like for instance, this Near protocol, it's like an Ethereum smart contract platform.
Okay.
Or Cardano, or half a dozen of the other ones I have. You can stake within their wallet. I can earn yield with a wallet on my computer where I have the keys. So there's something there for everybody.
Right.
You know what I mean?
Right.
There's something there for everybody. If you have zero risk tolerance, I mean, you're not going to take the risk, then only invest in Cardano, open up a Daedalus wallet on your computer, and stake your coins within the confine of you owning your own private keys.
Right.
If you want to own different coins, you're going to have to take different levels of counterparty risk, because there is not all assets react or act in the same environments the same way.
Right. No, I think I can't think, aside from what you just described, where you're super wealthy and you have your 5 buildings in Manhattan, but let's just take regular working folk, right? Where else do they have the opportunities other than crypto? Because I don't think there are. I don't think there is one.
Well, there isn't. I've looked. Believe me, I have a lot of time to look.
Right. and so that's outstanding. And one thing that people got to learn is that you need to own these assets and you need to develop passive income if you want to retire and live comfortable. That doesn't mean extravagant. I just mean comfortable. You know what I mean? Because you said at the beginning, Social Security might not even be around when I hit 65. I mean, I'm 12, 13, 14 years away. Who knows what it's going to look like then? You know, they keep adding the age. The age will probably be 70 by the time I hit 65 anyways. You know what I mean? Right. And so we can never rely on the government to honor its promises. That's for sure. And so we have to take the power in our own hands, and we have to educate ourselves, and we have to look. I mean, when they passed, Jerry, this infrastructure bill of another $2 trillion, and they print another $2 trillion on top of the $2 trillion, on top of the $2 trillion before that, I believe that if they do that this year, then in the last 2 years, almost 37% of all dollars ever printed in the country would have been in these last 2 years.
Yeah.
That's staggering. Well,
that is staggering. And here, this is the scary part. As somebody who's loved America since the day I was born, to understand this particular premise that if we're knocking out $7 trillion a year in spending, but our tax revenues are only $3 trillion, that's a huge shortfall. Where does that difference come from? Well, the federal government does have a relationship with the central bank, right?
Right.
And so their bonds will get backstopped regardless. But what happens? What state do you live in?
I live now in Rhode Island right now.
Yeah. Let me ask you this. Does the state of Rhode Island have a printing press?
No.
So the only way they can generate revenue for the state is through taxation or issuance of municipal bonds.
Right.
Do bonds pay a return?
No.
So it's taxation.
Right. Absolutely. And every year it's going up. Every year. You know what I mean? You got people in the community I live where you see your assessment on your house and you're like, wait a minute, it's not worth that much.
Right? Wait, you'll tell me will you give this to me right now? This is yours.
Right. Yeah. Hey, I'm out. I'll tell you what, knock off 10% and I'll take that. No, so you're right. And at some point there's just, I don't want to be a pessimist, but I don't know what the answer is, because at some point you just can't keep printing your way out of it. You just can't. At some point, something's going to happen. You know what I mean? That's going to have a huge impact on us. I don't know if that means we go into a depression or what we do, but you just can't spend $7 trillion and bring in $3 trillion and just keep doing it year after year.
You would think that intuitively, we'd all think that. Guess I'm not saying I'm the world's most knowledgeable economist, but this is what I'll tell you. With trade being conducted in the US dollar, with 80% of debt in the world denominated in the US dollar, it is a race to zero, but the dollar will remain king. It's king of crap, but it's still king. And we a chosen few who somehow stumbled into XRP, Ethereum, Bitcoin, or whatever, and went into the rabbit hole of trying to understand how this relates to the world outside of us and how we can benefit from it or how it will benefit the world. We're in a position that we're going to escape it, like the 1% have always escaped it. Yep. And I think one of the best things we can do is share that knowledge freely and openly, the good, the bad, the pros and the cons of it, and do everything we can to lift, our brothers and our sisters up with us. And that's one of the things that I most admire about you. So what do you say we segue into the XRP topic and give us an update of what's shaking with you, because you're making hay. You're making hay in the world. So
I appreciate it. Well, the reason why when I told you that tonight was better for me than next Friday is because this time next week I'll have only 2 more days before my brief is due. So I'll be probably in a little bit of I won't say panic mode, but just I got to get it in. Hunkering down and burying myself. And so that's why, and I appreciate you bringing me on at short notice. Well,
I hope that you'll come back again and again, because this topic isn't time. This is not a timely topic. This topic is going to have legs for many years to come. If you look at the reality that maybe 150 billion of us are tuned into this in a population of 7-something million, I think there's a lot of room to grow and educate here.
Oh, absolutely.
A lot of people to touch. Let me put it up before I turn it back to you, John. Folks, if you have questions for John specifically about what he's got going on with his case against the SEC, or any SEC legal questions, make sure you throw them in. Brady will put them on screen, and John will do his best to address it. And we got one of your
Michael.
That's a TV show, the 11,000.
Yeah, Michael Angelos. I think, is that what it says?
Yeah, it's exactly who it is.
Hey, Michael, thanks. I'm glad to be with you. So appreciate the support. No, we have our brief due. That's the 19th. We get that in, and then on May 2nd or May 3rd, the SEC and Ripple will give their response, and then a week later, I get to reply. And so today there was news. The judge denied. The SEC lost again, basically today, because the judge said that they cannot get into the personal financial records of Garlinghouse and Chris Larsen. So the SEC is 0-2, right? Ripple won on the Bitcoin Ethereum discovery issue, and Ripple, 2 executives won, basically saying, the judge just basically said, you have all of their XRP transactions. This isn't a fraud case, so you don't get to get into all their personal financial information. And so that's big news. I think that we have a good shot. I really do. You can never promise anything in litigation, but I think that we meet the legal standard. The one thing that's different about that the SEC is failing to realize, the other cases, Jerry, were really all really ICOs,
Kit, et cetera, et cetera.
The Telegram case, they were basically promising, here are these grams, and we're going to pool that money and build the blockchain, right? Very different than a blockchain that's been operational since 2012. But also, what the reason I think we're going to hopefully be successful is that XRP holders, the 11,000, we're not just investors. Some of us are, but there's users who utilize XRP on a daily basis as a substitute for fiat. You have your Uphold card. A lot of people get on the ledger themselves, and they send money to people across the world using it. So we get to use it for consumption, and the SEC has no standing when it comes to users. And so I like our chances. I think we have a good shot. I can't be overly confident, but we're going to put our best foot forward. That's for sure.
You willing to take a question from the audience? John, does Ripple have some type of count claim against the SEC?
They really don't, because the SEC has basically, the Congress has authorized them to be they get broad discretion on who to bring a case against and who not to bring a case against. And even though it's unfair, that, Vitalik Buterin in 2014, he held an ICO and they let it go. And I don't think they should go after him now at all. But, they're going after Ripple for things that were done by others. There's really no counterclaim of like selective enforcement that it's unfair. What comes down to is that if they do find discovery where it can be proven that this suit on the day before Clayton leaves was done intentionally to hurt Ripple or XRP, then there could be something. But we need more than just it. It looks like it, right? We have a prima facie case that they did stuff that it's not done for the right reasons. There's ill motive, in my opinion, but unless you have proof, you're not going to be able to get over that sovereign immunity that the government always gets to claim. And so right now, no, but if something gets uncovered, it's possible.
We got Bitta. I love Bitta Avenue. I haven't seen her for a while. Bitta says or asks, will you be handling other crypto-related lawsuits moving forward?
I don't know, to be honest with you. This was something that just started organic. It really was me just reading the complaint, seeing that it was unfair, knowing that all of us our XRP was going to be held in abeyance. And so, there's other people that would have done what I did. I just happened to be in a position with a law degree, and I had enough, I don't know if anger is the right word, but motivation against the government. Like just somebody's got to say something about this. But I've gotten a lot of, emails about, hey, I can't get my money out of Coinbase or this exchange or that. I don't see myself going into representing
crypto law.
No, not really. I'm more in a broader picture. I wouldn't mind being involved in trying to get positive legislation or something like that. You know what I mean? That's something I'm passionate about. I think that it's ridiculous that the United States of America is last when it comes to providing guidance to innovation. The UK has come out and said, here's 3 types of tokens. You have a security token, you have a utility token, you have exchange token. And they lay the guidelines, and then they say, okay, well, XRP is a hybrid between utility and exchange. And then they can say, well, Binance that's a utility token or whatever. But They provide the guidance so that it encourages innovation, whereas in America, we're supposed to lead. And instead,
well, we did. What was the last innovative boom? It's called the internet.
Yes.
But we led that sucker to the world's largest, most profitable companies that the history of man has ever seen.
Absolutely.
Right? Google, absolutely. Facebook, Amazon, Apple, all came out of that internet boom in that innovative, light touch, sandbox approach. Go ahead, guys. We'll give you kind of an umbrella. Do your thing.
Absolutely.
Some of you will bump your heads. Some of you will fail. But some of you might just change the world.
Absolutely.
And some of them, I don't know if they changed the world. They definitely conquered it.
Well, I'll tell you, you take a company like Amazon, and I know politically they take a lot of shots and stuff, but just look at, can you imagine COVID without Amazon? I'm just saying, like, there are some good things that these companies do. You know what I mean? People can demonize them all they want, but
John, when was the last time you reached into the glove box of your car for a Rand McNally map?
Exactly.
When was the last time you said, no, you got your cell phone in your hand, right? You got your Apple or your nice Android phone, and you said, no, wait a second. I have to go all the way back to the house and grab my Canon camera.
Right. No, absolutely.
The world's being dematerialized in front of our eyes. Companies are capitalizing it. And everything that we saw through the internet boom, we're seeing in this DLT boom. with with taking out the middleman.
Right. Absolutely. Absolutely.
The new apps that will be built on decentralized autonomous platforms that are going to replace all these apps that are run by companies that are profiting from us, they're going to be displaced.
I agree. I agree. I think we're heading into the decentralization of everything.
Michael Saylor, you brought him up, and yes, I do follow Michael. I think Michael is brilliant. Michael wrote a book called The Mobile Wave in 2011, where he basically outlined the dematerialization of these things and basically predicted Apple, Google, and Amazon were going to eat the world.
Yeah.
Through
I've heard you say that. Yeah.
Through digital networks.
Wow.
Now Bitcoin comes along, and we're getting to see all the same structural elements in play. It's just a different medium. It's money. It's not your photos. Right. It's money. It's not the map that you used to have in your glove box. It's now Google GPS. It's not the Canon camera. It's the camera on your phone. But you get the point.
I do.
It's innovation and the iterations of these things. Bill Gould had a question about the Howey test, and I'm going to pull it up if I can find it. Brady, maybe help me, producer Brady. Oh, here, I found it. Since the Howey test hasn't been updated in a while, do you think there will be an update or a completely new way to distinguish between whether something is a security or not?
Well, I don't think it's going to happen from the case. I think it's going to have to come from Congress, because the way the case is going, the only way there'd be a new test would be for the appellate courts. You'd actually have to get a ruling in the Ripple case. It'd actually be a verdict, and then an appeal, and then the appellate court would apply Howey, or they would decide that Howey needs to be expanded due to new technologies. That's only going to happen. That's not good for XRP holders, because that's 5-7 years of litigation. So I don't think it's going to come from the courts as far as replacing Howey. But I will tell you this. The Howey test is just being misapplied by the Security Exchange Commission. The Supreme Court never said the oranges were the security. Right? So the underlying asset, whether you can use Bitcoin as a security, you can use gold, real estate, the orange groves, the tracts of land, the way it was packaged and schemed into an investment contract is what was which was the security. Even in the Telegram case, the judge in Telegram in 2020 said the gram itself is not the security. It was the way they schemed the investment package and sold it that was the security. So even if we apply Howey to this XRP case, there's no way that they can claim that the XRP in your wallet or on Coinbase or Nexo or anywhere else, that that's an unregistered security. They can't do it. They can try, and they can try to go after Ripple and say that in 2015, when you sold XRP to this company or this investor, that was a security. Maybe they'll be successful at that, but there's no way that they can claim it. So even I don't shy away from Howey, because if you really look at Howey, there's no way XRP can be deemed a security today under Howey.
Well, you're the legal professional. I'm a YouTube dude, but my experience has been generally courts don't want to create law.
Correct.
They want to enforce law. They want to define law, clarify law. Law creation is generally left to legislators, politicians. We have a system in place. It's been in place a couple hundred years. Sure. I'm not saying it's the best. I'm not saying it's the worst, but it's designed where laws are created through what we would call elected officials.
Right.
A lot of times in our judicial system, judges are appointed. They're not elected. Some are. I mean, there are some judges that get elected, but most judges get appointed, and their job is is enforcement or clarification, not the creation of. And so I've never believed for 1 second that XRP was going to come out of this with any kind of legal mandate that was going to be universally accepted. I think that's going to be something that Congress has to get on the stick with. And I don't think it's just XRP. I think they need to, like what you said they did in the UK. What a brilliant idea. Here are verticals or fields or environments or designations, whatever word you want to use to describe it, and in a rough outline. Sure. And if you're in that, and you do this, and maybe this particular kind will have this tax treatment and this kind will have that tax treatment, because you can't really tax currency. Right. But we do in America. When you use XRP, baby, it is the only currency I know that's been designated by the government as currency that I get taxed on for its use. For it's either I'm subject to a capital gain or capital loss anytime I transact in XRP, even though FinCEN said it's a currency.
Right.
Now I don't get taxed that way when I spend my US dollars.
That's right.
So I mean, it's just not. There's stuff that isn't adding up, and you would think, come on, guys. I mean, I understand how important it is to, go over farm subsidies and shit like that, but
but Jerry, the crypto community, they've got to get together too and come up with some kind of approach to try to get to these regulators, right? To try to educate them on the need. And, if that means, donating to certain congressmen or senators that you can educate that will, vote for the bill that's going to help the industry, then that's what you got to do. Yeah. But we've got to get away, from the tribalism of, you're either for XRP or you're for Ethereum or you're for Bitcoin and everyone else sucks, right? You got to get away from that. And the market will decide the winners. That's the point, right? The market.
My bet's on the market, not a specific thing.
Right.
I'm betting on this market.
Right. And the market will decide the winners. And if we play the market, we'll be a winner with the market. You know what I mean? So it's like you said at the very beginning, where you said, you've got certain investments in different layers or different projects. You're not sure which one is going to be the $1 billion winner, so to speak. But, one of them is.
Somebody is going to build an application on a blockchain that gets used by over 1 billion people. Yeah. Now, I'll tell you, if you wanted to speculate, because I like to speculate. Now, this, and depending upon what year you buy it, $1 will buy you, a cup of coffee. Next year, maybe not. But right now, I can still get a cheap cup of coffee for $1. I believe it's going to be music. I believe music, that there'll be an app built, and I got a little taste in a project called Audius. It may be the one, maybe something else comes along, but it'll be like a Spotify or an iTunes or a something built on blockchain, where the creators of the content are dealing directly with the consumers of the content. There's nobody in the middle, and it's done on an open source blockchain that's being run on an app on your phone. And me, the user who does not care about crypto, but I want to hear that new Justin Bieber tune.
Right.
And I don't want to pay $20 a month to Spotify to do it.
Right.
Maybe I can just, through the app, spend 25 cents to be able to listen to it for a month and buy 25 cents worth of the Audius token or whatever the token is for that app.
And who knows that if
the artist, it could be something like that, music, because it's so universal.
Right. No, I think that's a very viable option. I bet a lot of the artists would be supportive of it. Many of them would make more money that way.
Well, there are, and I mean, we're XRP family are well aware of Scooter Braun's exposure to XRP. Scooter Braun being a manager of some of the largest names in music entertainment: Justin Bieber, Ariana Grande, blah 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 blah.
Right.
Scooter Braun knows a few people.
He does.
You know what I mean? And all it would take is maybe Scooter Braun does it. I don't know. Somebody will build an app on a blockchain that's decentralized, and there's no company in the middle making money off of it. It's the users and the content creators directly.
Yep. And
somebody will build that, and it will happen. Somebody will build an app that is exactly like Uber, but it's not Uber. It's Suber for, crypto. Right. And it'll be riders and drivers connecting directly on an open source protocol, and there'll be no company called Uber in the middle taking the money. Same thing with Airbnb, same thing. It's all that stuff.
Right.
It will happen. I just don't know when.
Right.
Because what, John, you and I know from even the time when we were 3 years old trading G.I. Joes with our friends, right?
Yeah.
Value always finds where it's best treated.
Absolutely. Absolutely.
So if I can get better treated on an app on my phone that's on blockchain than Spotify, guess what? I'll do it. Or Airbnb or Uber or whoever. I have no loyalty to those companies. I like the service though.
Right.
And that service can be replicated. That's the beauty of this. We have the technology now. I'm really excited. I think we've got a 10 to 15 year growth industry here, and us few that are in now, who some people think they missed the boat on Bitcoin because it's 58, or missed the boat on XRP because it's $1.05. Guess what, baby? No. This industry, this market is just going up, and I don't know what the best coins will be in 5 years or 10 years, but I know I'm invested in the ride, in the journey.
Yeah, I think we're in the first inning.
Yeah, me too.
I've heard people say second or third. I think we're still in the first inning. First inning. Absolutely.
Well, we just now, isn't it this year, we just now hit the first $1 trillion coin, the first coin with $1 trillion market cap.
Yeah. Oh yeah. Yeah. Bitcoin. Yeah. Bitcoin hit $1 trillion.
Yeah, Bitcoin. Yep. And there'll be others.
Well, and we're right. We're either at 1.9, or we may have hit 2 trillion total market cap for the industry. If you take all of
maybe it broke live on this show. Let's take a look.
It may have. Just think about that. It was 200 billion total market cap a couple of years ago, and now it's 2 trillion.
It wouldn't shock me if that little down tick we took in March took us down to about 200 billion, if I remember correctly.
Yeah, yeah, you're right. So less than a year. Yeah. Well, about a year. It's crazy. And Bitcoin alone is gonna surpass gold's market cap. There's no question about that.
No question.
There's no question about that. Then you start talking about the bonds. I know you've interviewed Raoul Pal, right?
Several times. Really like him. Good man.
I'm a big fan of his, and a smart guy. And when he starts talking about the bonds and the ceiling, there is no ceiling, and that ceiling unless you call 100 trillion a ceiling. You know what I mean?
Well, actually, there is no the Fed. The Fed has an infinite balance sheet. An infinite, they can absorb as much. There's no limit. Yeah. Hey, John, for the last little part of this show, I'd like to bring in the Market Conversations street reporter. This is a girl out there pounding the pavement for answers every single day. She's a relatively new investor, but a smart lady, a great learner, and she's got a question or two from you. I got her in studio.
Sure.
Let me welcome everybody. Welcome back after a couple of week hiatus. Bitta Av. Bitta.
What's up, Bitta?
Oh, Bitta, we can't hear you. You're muted. Your mic.
How about now? There we go. Happy Friday, everybody.
Happy Friday.
Nice to see you again, young lady. Welcome back.
Oh, thank you. It's been a roller coaster ride for me. The last 3-4 weeks has been very crazy, as you know, Jerry. So I'm happy to be back.
We've missed you terribly, and people are asking about you, and we're glad to see you back, and you're healthy, and the family's okay, and
yes,
nothing absolutely insane has happened, but there's been some stuff going on in your life. Do you have any questions for John?
Well, I had asked in the comments that moving forward, if he was going to be handling crypto-related lawsuits, especially because of the situation that I am in. Just to kind of give you a little idea, I had a SIM swap attack on my phone to get to my crypto, and they actually got to my stuff through hacking my phone provider, and they ported my number out without my authority and my knowledge. And now they've kind of exposed us to this world where like they were able to get to a lot of my accounts, including my bank account and my crypto exchanges, and locked me out of everything. And everything is kind of like in limbo because our information was stolen from the phone company. And through the process of having to go through get my stuff back, I've learned they were actually, I'm not the only one. There's multiple people that this has happened to. So from a legal perspective, like, do you see yourself or kind of getting into that world?
I certainly would entertain it. You know, I've been doing what a lot of people view as class actions. They're usually individual lawsuits that in asbestos that are combined into many, and I do mass tort litigation. Earlier, I was hesitant because obviously, if I say, yeah, if you just say I'm entertaining any type of crypto case, I could get inundated with everyone who has a complaint about an exchange or a complaint about this. You're talking about something very different, Bitta. And if the service provider, if there's several of you, all right, if there's more than you, then and it could be dozens. If it turns into hundreds, then you're talking about a systemic issue that is something that I would entertain. You know, it just depends on, and I also entertain it if it's an individual case. But I view that not so much as crypto law as just general negligence and liability, where it happens to involve the cryptocurrency as the underlying asset that was violated, if you will.
Yeah, it's been an interesting couple of weeks or three.
That's a pretty stressful situation. So I'm sorry that I can only imagine. There was an attempt to hack. They got into my through my email, and they ended up stealing like lots of my Marriott points and American Express points, and that was it. I got them back, but it was a hassle. But yours seems like much more of a stressful breach than what I experienced.
I mean, because they were able to port my phone number out, they were able to reset my email, my crypto exchanges, my bank, try to get into my bank. I mean, it was just like my information is, you know, floating out there, and it's just been a learning experience. So now it's pushing me to be more tech savvy. So I use it like as a challenge to be more tech savvy. So now I'm going to spend a little bit more time being a little more tech savvy, but this is not something I should or I will be neglecting, because it was a very serious thing that happened, because they were able to get into literally everything. And I don't like some of my exchanges, I don't even know where it's standing because I have been locked out of my own stuff.
Right.
And it's just been it's been very stressful. So
well, I do think that there's going to be a lot of litigation, because as crypto becomes more mainstream, and you go from 1% to 10% to 20% to 30% adoption in the general population, then that's going to attract a lot of hackers and people, you know, who want to do what they're trying to do to you. And so I think that there will be a lot of litigation potentially on whether it's against exchanges or service providers who didn't take the necessary steps to legally protect your identity, your number, your cell phone number, your email, or what have you. So that is an area I think that's going to be very ripe for future litigation.
Yeah, even I mean, even having to deal with the exchanges, honestly, like because their customer service is so poor, um,
Yeah.
it had become so impossible to reach and like to even figure out who, like they will, you know, there's a phone number to call, but then they hang up on you and tell you to send them a message, and then you send them a message, and then like this has expired or this case is closed. It's like, how is it closed? You haven't even answered my question. And it's like, well, send another email. And
Right.
it's just been going in circle and in circle. And this is something that since it happened to me, that I really want to take seriously. And I actually want to do a few episodes of what has really happened, and like what part did I play, and like what I should improve, and what other, you know, things that people should be doing to protect themselves. And I feel like I should, instead of, you know, staying kind of sad about it, and I really want to take a, you know, a active position and saying, you know what, like this is what I'm going to do to protect myself moving forward, and these are the things that the holes that need to be filled on my end. So
But no,
it's just
that's
been crazy.
well, that's great, because just think about how many other people that are in your shoes. So if you're able to educate them on the mistakes you made, all right, because you didn't even know they were mistakes at the time. Experience is the greatest teacher in life. You've experienced this now. If you can share that experience and prevent other people from having the you know, a couple weeks of experience that you just went through, you're going to be helping a lot of people. So that good for you for even wanting to get it out there, because there are others who are in your boat, you know what I mean, and experience exactly what you did. In customer service, I don't know if you've ever experienced Coinbase, that little bot that
Oh my
that you text. Yeah, I don't even know if it understands English, to be honest with you. But there really is that's the one area. And think about Coinbase. Coinbase is going to be valued at over $100 billion on its IPO, it looks like. You know what I mean? And its IPO is going to go through the roof, most likely, considering their results lately. But they're, you know, and I'm a Coinbase customer, but their service sucks.
Yeah, their customer service is definitely, oh my God, I've wanted to break my phone multiple times. Like I got so frustrated, I just wanted to throw my phone, but then I needed my phone.
Talking to that bot? You talking to that bot?
Yeah. You know, that could be a show. That could be a show unto itself. I'll tell you, the best advice I've gotten since I've been in this space is don't have financial apps on your phone. And there are some of these platforms that we all use that are only available as an app on the phone. And a way to protect yourself is to only use that app when you're in your closed network at your home, and then delete the app off your phone when you leave your home. If you do not have these things accessible on your phone, there's no SIM swap in the world that can mind read. They can only go off of what they have. So if it's not on here, they don't know I have it. There's no access to it.
No, you're right.
Yeah, I would have to disagree with you, because when you when they're actually going through the exchanges, if they have your name and your phone number, they're actually going to each exchange and checking if you have an account.
If they got access to my phone through my phone company, how do they know I got a Coinbase account?
I think they are just hitting up every exchange with your name and number,
and
resetting it.
I'm not going to disagree with you there. A smart person would do that. Hey, he's 54 years old. Wait a second. He's 54. He's bald. He's fat. He doesn't got any crypto. I think I'm safe. You, pretty young, tech savvy Instagram superstar, you're definitely got own crypto. You're a target.
Yeah. Interesting. It's been an interesting journey, definitely. So yeah, it's I mean, I was sad about it at first, but then I said, you know what, it's for me, the main thing has been that I actually have the knowledge of what crypto is, and like I will be able to make it back. Just the knowledge nobody can take away from you, you know. But that's the most important thing that I've learned, is the fact that I know this asset class exists, and what companies what cryptos to actually invest in. Like having done all that research already, like I feel like I'm already ahead of the game. So like I'm not gonna, be too sad about it, but I don't think it should be happening to anybody, so that
Right.
you can prevent it. So yeah.
Well, Dogler4XRP says they search your emails if you don't delete them.
Right.
And that is
They
actually
went
a
through
very good
everything.
practice. You delete your email and then you take out the trash.
Okay, I'm
out
off with that too.
You know what? I am too. I just realized that I am not taking out the trash as often as I should in my computer.
Yeah.
You know what I actually did is, as soon as they got my service hacked, I actually got on my email and started taking screenshot of what they've been deleting, because by the time I got done screenshotting of what they were doing, because I couldn't stop them doing it, they had already cleaned my stuff. So I couldn't, but I had already taken screenshots of them as they were doing it. It was like it was so quick that it was ridiculous how quick they were.
Britta, we're gonna have to take this. I think this is a topic for another show, and I also want to respect John and the audience, because generally we never go more than an hour and a half, and here we are at that point. One last thing, Scorpion, there is a proto mail, which is an encrypted email service that's free up to X amount of bytes of information. And you can use that just for your crypto accounts and your banking stuff.
Oh, okay.
And you ain't hacking that. You ain't hacking that email.
Is it an email or is it an app?
It's called Proton Mail. Proton Mail. And you can get a free account. It'll give you X amount of bytes of information. And then after that, you got to subscribe if you want, more and more and more. So anyway, folks, it's been great. I want to give John a moment for what we would call final thoughts, and invite John just for a minute to stay on in the green room. I have a tip or two for you regarding yield you might like. But John, final thoughts on tonight's show, and then I want to bring in Brady for his final thoughts.
Well, listen, the only thought I could think of, I have to correct you on something. I'm sorry.
Okay.
I have to do it, okay? You are more than a YouTube dude, my friend.
Oh, thank you. You're too kind. You're too kind.
I appreciate you having me on. I've seen your shows before, and it's been my honor to talk to you. I look forward to coming back. And
good.
And I definitely might, even after the green room, I might hit you up on your experience on generating some yield, because I'll be honest, I'm not going to pretend. That's one area that, I've done well in my investments in my crypto, but I haven't done as well as I can as far as, producing that passive income and that yield that we've been talking about tonight.
Right on. Well, I'm an open book, so that won't be hard to get that info out of me, at least in my experience and what I've done. Brady, are you ready to come in, young man? Let's see here. I'm going to try it. Brady?
There he is.
Hello, hello.
So, Brady, your thoughts on this show?
I'm staring at it right now, and I pulled it out of my pocket to check, because it's, we always want to be as secure as possible, and since this is digital and it's constantly changing, I guess
you're going to take your final thoughts to go through the apps on your phone with the live audience. I love it.
Yubico. It's better than two-factor authentication, and I suggest, in addition to people getting a Proton Mail account, they also get a Yubico key, because it's like a physical two-factor authentication device that is basically only enacted when it's pressed. So it's not an app on your phone. So it's just another good layer of secure protection.
Interesting. Okay, so if somebody did hack your Google account, which they have access to your two-factor authentication, this circumvents any of that. It's unhackable that way. Okay, makes sense.
They'd have to get into your apartment and get your USB drive and then plug it into the computer and then touch the button when it asks for the 6-digit code, and then you put that into the computer. So they would have to know exactly where it is,
right,
and how to use it, and on which computer it's. So it's It's just another layer of complexity.
Cool. So you're saying the only third-party risk would be our boyfriend, our girlfriend, our husband, or our wife?
in-house job. That's
Yeah,
the
in-house
only
job.
problem.
Okay, right on, right on. Well,
You
folks,
said Unico?
It's called Ubico.
Ubico.
Oh, you.
Yeah. Yubico.
all right, gang.
And
So
that's my
I'm
final
gonna-
thought.
Thanks, Brady. I'm
Thanks,
popping
Brady.
you guys backstage for a second, and I want to just say thank you to all the folks that have tuned in. I was really honored that John would accept the invitation to come on the show, and I think some stimulating discussion was had tonight. We're all searching for a way to stay afloat here or to even get ahead, and traditional methods just aren't there anymore. So we have to expand our knowledge base. We're going to have to understand the dynamics of fixed supply assets. We're going to have to start valuing things from a network effect as opposed to a price per earnings or a amount above surface, like with gold or silver type of approach. We're going to have to change our thinking to stay ahead of this game. Well, I look forward to being on that path with all of you as we discover these things, flesh them out. There it is. Thanks for tuning in, and I hope tomorrow you're a better investor than you were today. Till next time, Pura Vida.